Thank you so much, Tai, for organizing this important session. And thanks, Dr. Alok and Avnish, to join me on this panel. For all those people who are there in this conference, I think two things that everybody is looking is either you get funding or you get business. So we'll try to discover this code of how you can get funding and business at the same time. And I think no better than the corporates' involvement in this. The way the corporates, are, not only in India, there is a global trend that corporates are now becoming the biggest source of funding even for the VCs. They are putting money in their funds. They are directly making investments in startups. They are partnering with angel networks, with angels, HNIs, and they're trying to open the doors for everybody to become more inclusive. So this is a trend which is happening, started in Silicon Valley last 5-7 years. Is catching up in India, and I think these two gentlemen sitting alongside with me are the pioneers of corporate venture funding. They are setting up the foundation where I think more corporates are now looking forward to this asset class to become even more aggressive at early stage to partner with startups. So all those entrepreneurs who are there in this room, if they are trying to figure out that how they should approach any corporate for both business expectation and funding expectation, I think this is the session that we will try to collectively find answers towards that. So let me welcome once again Avnish and Dr. Alok. A small intro about myself. I am co-founder and CEO of V Founder Circle. We are trying to build a global community of angel investors who can come forward and engage with startups at early stage and make investments. So for us also, I think as a stakeholder in the community, I'm also looking forward to this session and learn basically how we can partner even more. We're already working very closely with both these big organizations. Dr. Alok represents Samsung. He was one of the first person who set up the foundation of Samsung Ventures in India. And Avnish, for years, I think he's one person who is driving this from the front, that Accenture is taking very aggressive positions in both giving business and funding to startups. So, want to bring you into the conversations with your introductions. Okay, I already said about this, I think, but I think people wants to hear from you.
Sure.
That what is your personal journey, what you are doing at Samsung Ventures.
Sure.
Yeah.
So thank you. And when I joined Samsung in 2011 as CTO, the first assignment was, company has been delivering great. The productization, the commercializations have been ongoing very nicely. There was credibility, but how do you bring an R&D and innovation layer on top of that? And I'm glad to share that this year and even earlier, we have received National IP Award from Government of India for highest number of patent filing and grants. In last 25, 26 years, 7,500 plus patents we have filed from Samsung Bangalore itself. Now, having said that, in 2015, I started looking into how do I widen now that in-house innovation is going to the startups and universities and standard bodies and open innovation to grow. 2017, Samsung Next, we could convince and Healthify Me was the first investment in India in 2017. And then with further persuasion, globally, we have been doing a lot of investments, but we created an India fund with Samsung Ventures. And since then, 2018 onwards, we have been continually investing into various startups.
Great. Avnish, sir.
Yeah, thank you, Neeraj, and good afternoon to all of you. So my journey started with, I was the corporate strategy lead for Accenture in India, and at that time, Accenture was very aggressively trying to become the digital leader globally as well as in India. And as a strategy head, I gave one recommendation to my leadership team saying that if we want to be a digital leader, we cannot just depend upon the innovation which happens within Accenture. And we can also not depend upon innovation which is being done by our big partners like SAP or Microsoft or Salesforce. So we have to partner with smaller and more disruptive and agile startups. So sometimes, as they say, that you have to be very careful of what you wish, because your wishes have a nasty habit of coming true. And when I gave that recommendation, my leadership said, well, why don't you go and build Accenture Ventures and the Open Innovation Program? So that's how I landed up 7 years back. But to be honest, that was probably the best thing which has happened to me in my professional career. And I have enjoyed each and every moment of working with these disruptive startups, helping them in their go-to-market journey. And it has actually made me much younger, to what I actually am, right? Working with these young, hungry, disruptive startups has been a phenomenal experience, and I won't exchange anything for that.
Great. So for all those people like who are there in this room, both from the investing side and from the startup side, I would like you, both of you, to kind of just make it easier for people to understand that what exactly is corporate venture funding and how it is different from a typical venture funding.
Okay. See, I think a couple of things are similar. For example, if you are making an investment, you want a return. So ROI is the first primary factor. If you look into investment windows, little bit could shift, or exit criteria, these would be almost similar. But where it differs fundamentally is that there is a strategic angle. On top of the financial ROI, we try to see the product fit. If I am investing into a startup, there is a reason behind it further. Is there a technology that I forgot to invest in it and suddenly it has appeared? Then there is a startup need. Is there something that may come in future and therefore I should invest now? Or maybe today there is an immediate need. So this is a balance between the financial return, obviously that has to be there, but more and more if there is a product fitment. So today, for example, we have a Bixby, and if I want to launch this Bixby voice assistant in India, we can do in Indian English. That's what we have brought it. But if I have to go to Hindi and other languages, I need a partner. That's where we have a partner. If we have this Indus OS as an app bazaar, and that is in multilingual stores, that is where we can do. So summarizing, consumer experience and consumer reach, if I can increase these two through an partnerships, that will be one of the important criteria.
Great. Avnish,
I think the only thing I'd like to add is that obviously the VC form of funding is well known, right? And the VCs take higher risk for higher returns. That is the model. It has traditionally been like that. But if you look at the CVC model, Dr. Alok very rightly said that one of the key ingredients of that is that there is a strategic positioning involved. But let me just demystify that further. There are three kinds of CVCs. There is one CVC who would only invest for strategic purpose, right? They actually have very little or minimal interest in what should be the financial ROI, because they want to invest and put those products and IPs and platforms in their business. If you look at Tata Steel InnoVenture, it is a classic example of a VC which is totally strategic if you have it, let's say, on the left-hand side. On the right-hand side are VCs or CVCs who are actually doing it only for the financial ROI. And this is something which is not very well known, right? Now, if you look at Google Ventures or Toyota Ventures, they have very little to do with the parent organization. And their investment thesis is to actually get into businesses which are not the core of Google now, right? So it's a very, very loosely coupled kind of a model. And the main expectation is financial gain. And in the middle is this hybrid model of companies like Accenture Ventures, which have a very high strategic stake in investing, but we would also not mind a reasonable financial ROI. So these are the different models and how they compare with the traditional VC model.
No, great. I think that's a great insight. A lot of people will get clarity that what is the difference between a typical VC and a corporate VC. And what's the mindset basically when they approach any project, when they approach any startup. That will be really helpful. So taking this further, because this is something that we do on a very different small scale. Both of you highlighted the strategic involvement part into the business. And we as a company, we Founder Circle, we go very deep into ecosystem. And we try to bring the local SMEs to come on board and start looking at startup investment only with a strategic benefit point of view. So in a sense, I see a lot of similarity and I see a lot of challenges also here. Would you like to basically give some case study, some like one or two examples that how globally this has been, the strategic investment, say motivation of corporates have really given a lot of strength to this movement, and how big this corporate innovation and open innovation as an industry. I know, I think Accenture itself, the numbers are mind-blowing, but I want to hear it from you, that how big is the impact of this strategic partnership, open innovation thing?
Yeah, I think, if you look at the overall landscape, there are three things which we are talking about here. One is what we call the Open Innovation Program. Yeah. In the Open Innovation Program, the idea is a joint go-to-market, right? So you have startups which are bringing product, IP, and platform, and you have a company like Accenture which brings services and domain expertise. And combining that, we are able to go and service our Fortune 500 companies in their digital transformation journey. That's a classical open innovation model. Last year, working with our startups in India, we generated more than $1 billion of incremental sales, right? And we help them globalize as well as attain significant scale. So that's open innovation. The second is what...
I'm just holding you there because the number that you just mentioned, I think it needs some kind of highlight. You are saying that Accenture has given more than a $1 billion business to startups?
Well, to clarify, it is a business which both Accenture and startups have got together.
Great.
And I will not separate the two to say who's got what. But I think irrespective of that, is it a...
It's a big number. Yeah, it's a big number. Yeah.
It is a significant thing, and we are very proud of it. If you go to the market and you go to the startups, and if maybe any startups who have worked with us, they only come to Accenture for market access, right? They will go to other people for mentoring, for running an accelerator, or even for funding. But they know that the best player in the market to provide them global access without having to spend $1 of BD is Accenture Ventures. And that's what we take our pride in. We are very focused, just like our deep tech startups, which I like 2-inch wide and 20-inch deep. Accenture Ventures is also like 2-inch wide and 20-inch deep. We only do one thing, and we do that better than anybody else. So that's our open innovation.
So you are challenging Dr. Alok here.
It's always good to be in a competitive scale. Now, the second thing is what we do is strategic minority investments. So we don't come as a lead investor, but we would come as a strategic minority investor with one VC or multiple VCs leading the round. We have done about 65 investments till now. And our recent investment is a very exciting startup. Some of you would have read about it. It's called Pixel. It is a space data startup, which we have done. Now, people ask, why is Accenture investing in space? And that goes back to what you were asking, Neeraj, that this is the strategic connection, right? Correct. For us, space is the next frontier, right? It is the new industry in which Accenture wants to go very, very deep. Now, if you look at Pixel, they provide hyperspectral imagery. And that hyperspectral imagery can provide us great insights for our clients in industries like mining and agriculture. That is the reason we are going into space. So there is a very strong strategic connection, and why we want to invest in those startups which either help us to get into a new industry or into a new product. The last one is making acquisitions, right? So we would also make acquisitions if we feel that the startup is heavily biased on the services side of it, because we can actually embed those people, those capabilities in the Accenture pyramid. Great. So all the three for us, partnership, investment, and acquisition, all translate into innovation coming from an outside-in perspective.
Great. So yeah.
No, I was just responding. You asked about the global trends, and at the same time, Avnish has been giving fantastic examples. So if I take just the reverse order, the acquisitions from Samsung style, the Harman acquisitions that happened, it's a mega acquisitions, and it's in a different space, autonomous vehicles. Samsung, at some time back, it used to do this car manufacturing. It went out. Yeah. So that's an acquisitions. If we look into global investment that have been very successful, Samsung Pay has been built on Loop Pay. That's an acquisition from initial investments. And also SmartThings, which is our AIoT platform in which I have worked very deeply. Today, 200 million devices are connected. This is in 2015, globally, we invested. So having said all of the global trends, in India, when we started 2018 onwards, let me give few examples. Do we lead? Do we follow? What do we do in the investments with the partners? We follow all of the models. One company, in the voice assistant that we wanted to do, it was in seed stage, early stage, and we led that, and it's still there, and I explained why we needed to go if we wanted to do multilingual voice development. Yeah. There is a second example, like Flixtree, that we have invested, which is more together with an angel network and us, almost peer-to-peer development. If we look into another example, Rento Mojo, for example, these kinds of companies, Axel, IDG, many of the others, similar examples that are there, whereby we have kind of followed, but have been working very closely with them. And then if I talk about our Swiggy investment, that is obviously, our check size is typically $1 to $5 million that we are doing in India. Yeah. So it is definitely a following round, but it is very strategic because even the other corporate ventures that are there, or maybe the full VCs that come along with us, they understand the value, what we can co-create together. And therefore, I think there is interest. And for us, as I said, the product fitment is the fundamental that we follow.
Great. I think both of you have given, different example which classify your involvement with the startups, at various level. And I think this is one of the myths that I wanted to address through these conversations, that most of the startup feel that we need to approach to a corporate VC only in the case that if we are looking for either a acquisition route or we are looking at a global GTM. But when you are saying that you are partnering at a very small seed stage also, and you're involving and co-investing with angel networks, not only the VCs, I think that's where the whole opportunity becomes even bigger. So just taking this forward, Avnish, I wanted to ask you that what are the learnings that Indian corporates can take from this, and can it go to a SME level also? Can SMEs directly involve startups ecosystem directly, and can they also participate? What is the learning for the Indian companies in this?
I think, one thing which I like to talk about here is that corporate venture capital in India is still an evolving asset class, right? It is something which is not fully understood yet by a number of corporates. If you look at the domestic CVC, it's only 25% of our overall CVC which is coming in India, and it's a much smaller number if you look at VC funding, right? So the question then is that why is that happening in India? There are three reasons for it. One is that, as I said, the overall construct of a corporate venture capital is not that well understood. I was just recently working with one of our clients in south of India, and they actually hired us they said that, we want to invest in precision agriculture startups all over the world, but we really don't know how to go about doing it. So can Accenture Ventures come and help us first in setting up the investment thesis, then doing the technology scan, making the investment business cases, presenting to the board, deploying the fund, and then looking for exit options. This is an offering which we have of our clients, which we call corporate venture capital as a service, right? So first thing is that a lot of Indian corporates are looking for guidance because there is no guidebook at the moment available on corporate venture capital in India. That's the first reason. The second is that still a lot of corporates think that it is a high-risk business.
Yeah.
And they don't know that there are multiple ways to mitigate that risk. For example, the highest risk is when you are investing in the startup directly. Now, if you think that you want to go slowly, you can actually take many more constructs. For example, investing in a fund of fund.
Yeah.
You could invest in a fund of fund, and that way you would be investing in multiple funds and multiple startups. You are significantly mitigating your risk, but obviously the rewards will also be low. Or you can come as an LP in a particular fund. Or you can do co-investment with one fund or multiple funds. So there are many ways to mitigate your risk if you are worried that you are not very clear about your risk appetite as far as startup investment is concerned. So that's the second reason. The third, a corporate can overcome these two reasons, but the third one is a difficult one, which is about government tax and policies. Now, that is something which is still again evolving. We just heard in the last session also that regulation always follows innovation. Now, it is something which is very true in corporate venture capital as well, whether it is the tax implications, whether it is the reporting structure. Those things are still evolving. They are not at the moment at a level where it is making the whole corporate venture capital environment very conducive for corporates to put money in the startups. So if we can address these three things, then I think there is a significant upside for India corporate venture capital landscape to grow.
That's very interesting to hear, and I think it was sounding to me like somebody's reading our playbook. So, because we do at the same thing actually on an angel investor level, okay? I think the same thing, the same risk, same myths about the whole asset class, and I think the compliance, okay, that angle that you bring so that they feel that their money is going into the right direction. So we do, I think, day in, day out, exactly the same thing what you are doing for the corporate. So a lot of parallel that I can draw from there. Dr. Alok, I want to take a typical startup question that tomorrow if somebody from this room wants to reach out to Samsung Ventures or Accenture Ventures or other like corporate VCs, unfortunately we didn't have Seema here, okay, who represent Google VC, but we are working very closely with all three of you. If any startup wants to come and pitch you, how they should approach this differently from any other pitching that they are making to a true sense investor, be it an angel or a fund. Is it different that they should approach you, Dr. Alok?
No, I don't think it has to be different because the startup is startup and they have a business and they have a reason to raise fund. If it is of our size, then obviously I don't think they need to play with that. What happens is many cases we have where we do the investment first and then maybe a business that comes GTM, we work with them because it is early on, there is a lot of potentials. So we are assessing more on the technology and the potentials of technology. So more so, and then we know that we can convince our business teams over time and we can do it. In some other cases, it is business first. It is quite immediate need. Yeah. And therefore, the business groups will play a role in selecting whether we should go ahead with them. And I would look from the technology angle, fine, you have an immediate fulfillment, but what is your trajectory? How will you unfold your future? If you do not have a future, just the present need, then I can just be partner, but not necessarily I need to invest in them. Okay. So these are the two philosophies. And then just the last point is that we have different platforms, Samsung Health, Samsung Pay, Bixby, SmartThings. So for corporate, we internally try to see that if this solution comes, until unless it's opening a new era, right? Quantum technology, that's different. But if it is in this, which asset class I can consider, where will it fit, how will it fit, some kind of a block diagrams of that, and can they sharpen their packaging of the solutions? If I have an SDK, would they take it? Like, for example, Samsung Health has an SDK, and recently we announced, and we are encouraging if you are doing a yoga solutions or an Ayurveda solutions, can you take these, because in the wearable, all the sensors that are there, can you take this data and enrich your solutions? And then two together, we have a business into that, even though we have a feature, but you can grow that business, and probably we can have a share of the revenue part of it.
And that's very interesting. Would you like to add some more
I think,
use cases for
Neeraj,
people?
this is probably the most important question.
Yeah.
And I want to answer it on behalf of the startups. Now, we don't have Google here, but if had Seema been here, you would have seen 3 very different CVCs
Correct.
sitting here, right? And I was trying to explain to you earlier that how are the CVCs different? Now, Samsung Ventures, Accenture Ventures, and Google Venture, all 3 different. So it is the onus of the startup founder to understand which is the best CVC for them. And then the question is, what are the questions you should ask the CVC so that you get a better understanding of what is aligned to your own business and aspirations. For example, right, if you think or if you see and research that the CVC is actually investing through its P&L rather than a fund, it would mean that it is joint on the hip with the parent. So its flexibility to do things are restricted because it is very aligned to what the parent wants to do.
To the core business.
It is part of the core business. Yeah. That will give you an idea that, is this the right startup or is this the right CVC for me or not? Similarly, the second question is, how much time do they, keep their portfolio? When do they start getting, interested in an exit? All these questions, if you ask, you will get a pretty good idea that is this the right CVC for me or not. Let's be very clear, in India, if you are a good startup, there is no dearth of funding for you. And you are not going to the CVC just to get the funding. Otherwise, there are hundreds of VCs and private equity who can give you funding. But when you are choosing a strategic option of going to a CVC, you better be very, very clear and you should do your homework very well to understand which is the CVC you want to go with. And I'll just like to put 2 data points here on the overall CVC here. We know that startups is a risky business, but research has pointed out that the failure rate of startups which have CVC investment compared to only VC investment is almost half. Almost half.
That's a great point. I think we should acknowledge the role of CVCs into the startup ecosystem, that they are actually like hedging the risk of investment and of venture basically getting failed.
The other point, yeah. I just finished that, Neeraj. The other interesting data point is because everybody is looking for an exit. The exit rate of startups which have CVC is double compared to these startups which have only VC funding. I'm just giving you 2 very, very critical data points of why CVC is it's a very important thing to do, but you need to put your mind in terms of choosing the right CVC for you.
Great.
Can I just add one important point here?
Please.
The reason of that half, that as he said, is primarily, the corporates, the bigger companies, they have resources, the experts of every field, and there is business unit leaders. So therefore, when something happens, first of all, there is an internal diversity. You can go this country, that country, this product line, that product line. If you have a computer vision technology, you have possibly within the same corporate 3 different product lines that you could go. And then there are experts who would come forward once it is invested to be able to help, which is hard to get some other places.
Great. So with that, I come to the last question, and perhaps one of the most important question also at the same time. When we started, we as an angel network, started approaching corporates for joint, program rollout and how we can address the, question of funding and business for startups, especially in the early stage. We find out that there is some reluctance and there's a long learning curve and decision making is slightly more time taking. But then we figured out that actually the CXOs can play a very big role. They themselves can come like an angel investor in some of the companies and can become mentors to those companies. So on that point, I just want to take your feedback. Where do you see the role of the CXO, the leadership actually of these big companies, how they can be more participative and can give a direction to both the startups and to their companies, that how we should take this movement forward, this engagement and partnership, the role of CXOs?
Well, I think the role of CXO is very important, and I'm myself an angel investor. I work very closely with Neeraj. I have invested in about 15 startups. And, some time back, I had not made investment. So it's a very recent thing, maybe 3.5 years back I had started. And a lot of my startups used to say, sir, when are you going to make your investment? You give gyan to everybody in the world. But when are you going to take your own money and put it? Put your money where your mouth is. And, I did that. And I have since then, obviously, I try to make sure that there is no conflict of interest in my investments versus what Accenture is interested in. But I think, the more CXOs get involved, either in investment or mentoring or advising these startups. We have a lot of our MDs in Accenture who are mentors, especially to women founders who are developing excellent deep technologies or startups in the sustainability and ESG space. So I think, and they get a lot back in as well, right? Because they say, like, if you look at sustainability or you look at space, quantum, these are all evolving spaces. We also learn a lot when we go and mentor. So there's a lot of reverse mentoring which happens from the startup to the CXOs. So I think both the startups and CXO, gain a lot, both in investments as well as mentoring.
Yes, I think Nish has already highlighted, and depending on which areas, it can be a CTO or CMO or chief security officers, but somebody in that field, it does 2-3 things. First of all, they are sitting in the corporate governance somewhere, so they have the influencing ability. They also have the technology ability, they have the authority to do things. So all combined, as I said, when you go for only investments, the money may not have any color, but in the CVC money, there is a color because the mentorship comes, and depending on who these people are, can make a big difference into your product line.
Great. So with that, I think we come to the end of this session. You heard it directly from the people who are not just giving gyan, who are not just giving you very superficial knowledge, but these are the people like who are putting their skin in the game on a personal level, on a corporate level. They are the guys like who are influencing both the trajectory of the company as in terms of the capital that they can raise from corporates. But I think a huge opportunity to build a global business very, very fast without too much of experimentation, because they have done it, been there, scaled businesses, and they are the right mentors. So thank you so much, Dr. Alok and Avnish, once again. Lovely speaking to you. Any last word to the audience here, both the investors and the startups? Anything that is coming to your mind, the way you are looking at the overall ecosystem in last 1 year or so?
I'm just saying that, you have seen how the startup ecosystem has evolved. We are already the third largest in terms of the number of startups and number of unicorns. By 2025, we are expected to get about 150 billion of investments, and 500 billion of value creation will happen. If corporate venture capital does not participate in this opportunity, it will be a great pity.
For me, let's find deeper problem aided by deep tech at times. That's the future. And package your products